morning. It's March 28th, 2025. The Wall Street Weekly Wrap Up with your host, John Newquist. And it was bloody. An ugly week. And we're going to go through it. A lot of stuff happening. Not a lot related to stocks, more about what's happening around the U.S. policies. So we'll talk about the different things that we have. The next gen portfolio down 13%. Ouch. We could get down to 20% if this stuff with the tariffs and everything else doesn't resolve itself. You know, uncertainty, fear, doubt, all these things the market does not like. But everything's down. And if we look at the DAX, the German index, it's up. This is what we'd like to have. We'd like to be up like this, you know. Hey, we're up 20%. Well, remember, this is a self-inflicted wound. And we're at NASDAQ. Oh, I got to move it. NASDAQ's down about 9% too. And, you know, like I said, the Dow, the least of them, but, you know, not tech heavy. You know, we're a little tech heavy, but that's okay. It's made a lot of money in here. This time it's coming up and it's ugly. So we'll get through it. Remember, like I said, I'm looking at maybe we get down 20% at the worst on the S&P or NASDAQ. Let's hope not, but 18.6 was what the S&P dropped in 2022 with the COVID scare. I think it was March or something. So, you know, we're not there for the S&P. You know, the overall broad market's doing good, but not the tech side. And again, wow, I tell you, when people start getting scared, they buy bonds and bond rates go down. So we're below 4 again. We were above 4 middle of the week. Oil, 69 cents a barrel. I mean, I don't know about you, but man, gasoline prices went up 50 cents from beginning of the year, so it's up there. Natural gas staying at 4. Oh boy, we had a nice day today. It's like 71 degrees. Don't need the heat today. Gold, oh my God, boom, look at this thing. I mean, it's jumped. This is what fear is. They're buying the precious metals. Thousands of years, gold is the safe haven. Not Bitcoin, not crypto. It is an issue. So look at that. Wow, that's huge. Of course, silver's up $34, and you know, copper's still strong. Economic side is pretty good on the copper side. And then, you know, a couple posts in the video. You know, essentially, you know, Jensen, who's got all his chips sold for 2025, all of them, literally given away. They're going to have a shortage of data centers, he predicts. Well, yeah, because they can't get his chips, you know. But, you know, he says we need more. We do more and more artificial intelligence. We need more and more AI computing, you know. And so that's going to be an issue. And you want to be able to get the data real good. And, you know, cloud computing and data storage, again, a lot of data for it. I mean, the data's going crazy right now. You know, you're going to store everything. And I think it's going up. There was something, you know, I'll have to go check up later, but I don't see it slowing down. You know, I mean, Intel, different animal, but that's Intel. Newer AI models going to need more power. It's like that, but they're making chips with lower demand for power, so we'll see. What's NVDA? This is an ugly channel, and it's, you know, almost a 45 degrees straight down, and it's not good. So we're at an inflection. We're below the 200-day moving average, and that's never good. But we're not going to sell. You know, like I said, you sell and you pay thousands in taxes on the profits. You didn't really do yourself any favors. You know, then you got to figure out when you're going to buy back. So we're going to stick it out, and they're going to get a lot of you know, people panicking because, you know, a lot of people got hopeful. You know, at the beginning of the election and up to the beginning of the year, the market ran up, and if you were buying NVIDIA at almost $140, it's bad. And it's not really an overall NVIDIA issue, it's the whole semiconductors. Because, you know, they're going to talk about restricting the output of NVIDIA semiconductors, and, you know, the Chinese are talking about, you know, how that's going to affect them because they need it. Maybe they'll make a deal. You know, there's a lot of things that could happen, and you know, you got fentanyl coming to the United States from China and a couple other countries. I'll tell you what, I'm sure those fentanyl dealers are like expendable little tokens if they can get some hands on chips through making a deal. But you know, got to deal with the appetite. You know, we got the fentanyl appetite. It's going to go to something else. Anything related to chips. And look at this. I mean, this is a SOC, semiconductor index. It's been ugly. I mean, it's, you know, it's pretty bad. So, you know, we have to look at it as overall trend in the semiconductors. And the tariffs, again, going to announce 25%. It's going to be permanent, but we know on, on right now, that's what makes people crazy. You can't just do it with one time. You can't think about this thing in advance. People hate this on off, and it's driving, you know, businesses to not spend. Everybody's waiting. That for people are uncertain, they don't spend money, they hold money. The retail takes effect. It's just a self-inflicted wound, and that's all you can call it, because we don't need to be there. Of course, the automobile, you know, there's some, I think Ford said they got, I mean, 4 cars, but all the trucks are going to use, you know, different parts. And you know, as they retaliate against us, we're not going to be shipping anything over to Europe or anything else. You're going to kill the international sales. So, you know, Ford's down here. I wouldn't be surprised to get down to this level, below 9. People are like, below 9. Well, could. I mean, you know, these tariffs are going to be brutal for the auto side. And, you know, you got to fix your used car up. And what are you going to do with, want to buy a car? It's going to be $8,000 to $10,000 more. That's a lot of money. The average, if this is right, was 8.5 years for a car loan. 100 months payment for an average car. So if you buy a car for $60,000, $6,000 a year, you're paying, you know, a little bit with interest at 5.9, maybe $600-700 a month for 8.5 years. Whew, that's pricey. That's a spicy meatball, as they call it. CRWV came out. They were talking it was going to be in the 40s. It priced at 38. The trading got down a little bit lower. It got down to, you know, 38 point something, and it's closed at 40. CRWV, I mean, this revenue chart is just crazy. But, you know, you lost 800 million. You got a great revenue, but you lost a lot. 7 billion in debt. I am not touching this stock. You know, it's not the top 3 tech. You know, I mean, not the top 5. Not a mega level area. I mean, it could be a monster. You know, they rent the chips, they sell it, they use it for Microsoft. They got a who's who of customers. But I can't buy something that loses the 800 million in a year. That's just too much fire and stuff. So we don't want to be there. Lululemon, this was the darling. I mean, look at this 200-day moving average. This thing was up there quite a while ago. Way up there. And it's coming down. And it crossed below because the guidance is in there. Consumer spending and retail environment. People are not going to be buying the baggy yoga pants, which is a hot item right now. You know, it might be good. But remember, they make all their products in Vietnam, Cambodia, and all these other countries. And April 2nd, I just hear people, it's where all the reciprocal tariffs are. They don't know what it's going to be. They don't know if they'll be affected. So, I mean, I could see a drop of 5% around April 2nd to April 3rd. You know, it's just going to be an ugliness, you know, because if we do it on and off and countries balk, could be ugly. You know, I keep on going back to, you know, McKinley and those tariffs. And, you know, you make it miserable for people. There's going to be a lot of anger. VSTM, you know, I was looking at, you know, I get all these stuff with the areas. And usually cancer drugs I don't get into because it's always hopeful, always in there. But, you know, they had strong tumor regressions, and colorectal is pretty, you know, top 10 cancer, and I thought that's a pretty interesting stock. Now, what it is, I mean, if we are going to sell a healthcare, pharmaceutical, biotech, or something else, this might be the stock we go rotate it, you know, because we're overweight in there. I don't need to add another one to it. But this is one that, you know, nice chart. It was obviously a lot higher, and then it got down, and now it's a little bit good. And this is what you want to see. It's starting to slowly tick upward, and You know, it's in a channel, but it's not so bad. You know, this is a tough time. Again, you know, if we sell one, we buy one. We're not going to sit there and try to time market. We've got a good portfolio of leaders, and that's the thing we want to keep with. The recession, I was alive then. I remember this. I remember how brutal it was to watch the dot-com run up, and then it just wiped away, and it came back, and it was bad. And we'll talk about it, but we had a recession. You know, the business slowing went down, the dot-com bubble and everything. Everybody was overweight in techs. Oh my God, does that sound familiar? Sharp decline in business expenditure. Again, CapEx, i.e., we're nervous. We are going to hold cash, so we're not going to spend it. We didn't have corporate accounting scandals yet, you know, but consumer confidence, but that was due to 9/11. So, you know, we're looking at the, you know, the market coming from, you know, I mean, the 776 on the S&P is pretty brutal. I mean, that's a ugly as they get. You go 1,500, almost half, over half. And then it started coming up. And, you know, when you were going over here in 2002, it got up, got excited, then went back down, went up, went down, but then you gave up. It was just brutal. I mean, because people were like, I've taken so much punishment in the market. I buy it and it goes right back down. You know, I mean, this is not what you want to live through. And this is what I worry about, because until we get the confidence up, until we get the spending, until we get these stupid tariffs done and stabilized, which I think might be till June, we have 3 more months, April, May, to sit there and maybe get this thing settled. Wow, could be ugly 2 months, so brace for it. If you ease in slowly, because, you know, it's not good. What worked? Because I'm always interested. I remember this. Dollar Tree, Walmart. People started buying cheaper products, store brands versus big ones. Costco, you know, everybody was starting to try to figure out, go out, where can I get the deal and stuff. Defensive stocks, not defense, but, you know, defense went up after 9/11, but I mean, Procter & Gamble, Coca-Cola paid a dividend. These were companies, and I highlight the ones in green we got in our portfolio. Of course, we hold gold. Home improvements, you know, again, you can't afford the interest rates of stocks. It's going to be tough. So a lot of pain, and you know, everybody kept on, you know, like I said, these little jumps up. Everybody got hopeful, and they crashed that down. I mean, you know, we go back to this chart. I mean, look at this. One bottom jump up 2, 3, 4, 5, 6, 7, 8 times. They broke your heart. You got excited, and they crashed it down even lower. That's why people were out. People were just sitting in bonds. They didn't want it. They didn't give up on the market. They're like, it's never going to come back. I'm losing a fortune. And you know, if you're in retirement, which there's a lot of people in there with portfolios, you're thinking, I got to get out. This is like 2000. I got to get out. I got to hold something. I can't lose my whole portfolio. You know, I understand. You know, we don't know. We don't know if it's going to be like this and then go back up and then straight flat line. We don't know if it's going to keep going worse. A lot of unknowns, a lot of uncertainties, and that's why people are looking at it. Consumer confidence, you know, lowest in 12 years. I see it. I mean, I hear the conference calls all the time. Consumer is spending less. Consumer is buying cheaper because they're nervous. Credit card debt was at an all-time high. You're paying the interest rates. They're going to take the late fees from $5 to 30. They're going to allow. Hey, let's make it worse for the consumer. I mean, oh, that's brutal. So I think people are out there. And of course, you had higher gasoline prices, which went up 10%. The pennies are starting to get squeezed. And the Fed, you know, Bostic, I was hearing on CNBC, he expects only one cut. Now, the president had already asked for cut the rates, and he may not be wrong, but we'll see. You know, I mean, he's got 1,000 other things happening right now, so, you know, he might get on it, you know, because, you know, he watches that stock market. I don't care what he said, he's not watching. He watches it. He's watched it ever since I've sat there and watched him 20 years ago. He is always talking about the market, always watching the interest rates. Where is it at now today? So I just look at the, you know, the rate, you know, Fed funds rate. I mean, there was nothing worse, you know, than the, you know, right there at the 80s with, you know, inflation plus unemployment and just crazy crazy amount of stuff. And this is on Reagan too. I mean, Reagan's trying to get this thing down because remember, the bond market sets the interest rates, not the president. You can't sit there and say, I want the interest rates for people who buy a house at 5%. No, the bond market's going to decide it. And if they're scared and they think the dollar's going to be bad and everything's going to be bad, they might lower the rate. It just becomes, how much inflation there is. And if inflation's higher, they're going to maybe raise up, and then we get in a horrible situation. This was just absolutely miserable and stuff, That's why I tell people when I was buying a house, you're getting over here at 10%. You're talking, well, 6.9 is expensive. It is compared to that, but there we are. So, it is going to issue. I look at the crypto, it's all been ugly. And DOGE, somebody, DOGE is coming back. Look at it, look going up. And then got to 20 cents, went down another, 15%. So, those are painful hits. And, this is like, where you're getting your tail kicked too. So, I mean, I remember when DOGE was a nickel, I was on it and sold it. And, I got some DOGE, but just waiting. Back over here. You should have sold it at 45. I know, but I'm not too worried about it. The text, what I did on this chart a little bit different is I said, if it generally didn't move that much to the prior quarter, I just left it white. Greens mean it did a good one. If it's got a dark green, it jumped a lot from the previous quarter. And dark red, like Intel, jumped down a lot, over 5% moves and stuff. So, we got Apple that's, 4%. I mean, our techs are going to be at 10% or better. We want double-digit growth rate. So NVDA, there's no doubt, the king, 77%. It's down from 93%. Taiwan semiconductors, 36%. And it's going to go more because as they get built in Arizona and Tariffs and semiconductor chips, guess who's going to make a fortune? It's going to be Taiwan. Then a little bit goes to Intel, a little bit to other ones, but Broadcom's in there, 20%. That's a good one. ASML went up a little bit better. It had a good quarter. So did AMD, but AMD's behind. That's why I tell people AMD's trying to catch up to NVIDIA. And the Chinese are now going to start doing it. Good luck. Now, you can steal things, but you still got to buy the equipment that makes it. It's one thing to know how to do it, and another thing to buy the equipment to get everything done. Baidu, I think they're still the best autonomous software company. They're partnering in Dubai, and they're going to go out and do well, but kind of flat. And then ARM is always good, double digits here. And Marvel had another great quarter, so there's another one. I mean, there's a lot of good stuff in tech. It's just uneven, very choppy. You got a lot of stuff that's in the 10% under, and then there's a lot of stuff that's over. So pick your techs, pick your leaders. And the XLK, which is a tech fund, slowly better than it was in August, but not much. You got to remember, if you're here and you bought down here, you're not feeling good. You went from 240 to 206. That's a brutal hit. ARM, remember, the three kings, ARM, Taiwan Semiconductor, and NVIDIA, that's what's in the Blackwell chip. That's what's in there. That's the set. So these are our three kings. And, of course, ARM is taking a hit, too. PE's pretty high, but low amount of profit. They're going to get better, but these are hard hits to take. We didn't sell in August. We didn't sell over here, but that's why I said we can wait. If it gets ultra crazy, like ARM goes to 50, then we'll have to look at Bobby buying some more because fundamentals aren't changing. Broadcom, PE's 81. It's high, and pays a little dividend, but again, Broadcom's, better than it was over here. A lot of times people say NVIDIA didn't go much. Well, if you go to Broadcom at 150 and 165, then a little bit better, but Broadcom's, in the negative channel also. And Taiwan is probably the better one of all of them. Still, it's below the 200-day moving average, like almost all the tech stocks are. And, usually that's your good time to buy if you want to look at history. And again, what's red for the week? It's tech, Just take the swath. Only Tesla of the Mag 7 is positive. But, I mean, a lot of red here. Fairly a little up on the banking sector. And, of course, our defensive stocks are doing well. And so are the oil companies as oil starts to come back a little bit. So, it's tough. The pharmaceutical companies that we have, they're going to be an issue too. They took some hits, and so we have a lot of unevenness right now. The techs and the other people are just getting out because they just can't take the pain anymore. I was like, wow, weren't they in this thing in August? But apparently, short memories and a lot more money tied into it. Remember, be diversified. We're in the 12 sectors. Don't be out there betting it all on tech, because that's now you got the heartburn. But it's been a ugly week. Hopefully we'll get better. Hopefully we'll get some more stability. I hope we don't mention the T word, tariffs, because man, that's just like a kryptonite to the stocks right now. All right, let's be good. Enjoy the weekend. It's going to be warm, and hopefully we'll do better next week. Take it easy.